Well, thank you, Steve. This is my second year to speak at NASCOM. Last year was my first year, and I would tell you that the changes in the last year are clearly dramatic, and so we'll talk a little bit about those. I thought I'd take just a couple seconds here and talk a little bit about TPI to give you an understanding of our perspective of the world. What we do is represent large buyers, and usually it's the Global 200, Global 500. And what we do is we help them develop global service delivery strategies, where one part of that is offshoring, another part is captives, another part is insourcing, and shared services would be another one. So helping them develop these shared services strategies. It used to be, and there's some similarities here between TPI's transformation and some of the things that the Indian firms are going through, but a couple of years ago, most of our work was around IT transactions. I would tell you today, about a quarter of it is around strategy, another quarter is around IT transactions, another quarter around BPO transactions, and then the fourth part's about sourcing delivery. At any one time, we have 75 to 100 transactions going on around the world, and we have about 425 people and advisors around the world, so pretty much have a touch point everywhere. And the total contract value of the deals is about 15 to 20 billion. It changes some. One of the interesting things is fully 50% of our deals are $50 million in total contract value or less. So with that perspective, what I'd like to talk about is just about 5 key points that I would mention. And there's probably more written, more research, more advisors, more analysis of the Indian outsourcing marketplace than anything else. So it's really hard to develop some kind of definitive and different points. But from my point of view, and I would say the point of view of our clients, a couple of them are as follows. The first is that outsourcing used to be one-off transactions. Now, this whole concept of a global service delivery, that is key to corporations' corporate strategies. That is key to how they're not only going to compete in the world in terms of how they save money, but also how they're going to innovate with new products. Couple paradigm shifts going on there. One is the dramatic change from doing large mega deals to developing a portfolio of mega relationships, and usually based on best of breed, and that's something I'm sure we'll be talking about in a minute. The second thing is we're truly starting to see a change from not just cost savings, but to truly about adding business value and about innovation. A third key point would be, and this is especially significant in understanding our buyers' strategies in terms of the suppliers of meat, is a concern about concentration of risk. Somewhat related to Sarbanes-Oxley, somewhat related to the financial services industry, but you don't want too much of your service delivery concentrated in one provider or in one location. And so that has a big impact on what we're doing. A second major point I would tell you, and this is a difference between last year and now, is that literally in terms of any of our deals, unless it's just a huge infrastructure, mainframe, multiple data center kind of deal, the Indian providers have earned the right to be at the table. They can compete with anybody. Not only that, we want the providers to be at the table. What we've seen historically is that the U.S. and UK-based multinationals had offshore capability, but they really didn't want to lose it unless you made them use it. So early on, we began to invite the Indian providers to the table, to be quite candidly, to leverage the multinationals. Historically, in those deals where the Indian firms were competing as prime, now that's not, it's a good percent, but not a giant percentage, but when they competed as prime, in 2005, they won 55% of the transactions. Last year, they won 65% of the transactions. So they're doing well. A third point I would make, and this is a giant challenge for the Indian firms, is they need to be truly global. And truly global is not just having a few folks in the UK, a few folks in Europe, and shipping all the work back. As the work moves up the food chain, there's going to be a dramatic need to have substantial capability in different global locations around the world, and it's going to be a giant differentiator. What we're seeing, and those of you who might want to click on the TPI.net website, and there's the TPI Index, which is a report we do quarterly to Wall Street and analysts and media every quarter. We've been doing it for, I think, 20 quarters now. What you'll see is in terms of total contract value for deals of more than $50 million, those are actually slowing down over time in the U.S., dramatic growth in Europe. So the importance of the Indian firms being in Europe cannot be overstated. and the ability to be able to develop account management capabilities, change management capabilities is just going to be essential for future growth. A last interesting point, which hasn't been lost on us, but I think has been lost on maybe a lot of people in this room, is we really see the Indian market as a great market for outsourcing. We're really focused on doing transactions here. As we look at the kinds of work that can be done, we see the Indian marketplace 4 times bigger than the China marketplace. So we may very well open an office in China, but our clear priority was India because we think that's where the opportunity is. What's interesting is most of the India-based outsourcing deals have been won by the U.S. and UK-based multinationals. A really interesting point. I'm always asked about the future and what's going to happen, and are the Indian firms going to be successful? Well, absolutely the Indian firms are going to be successful, but what's really about is how successful will they be? As I look back over time, and I think some of Steve's points are really pertinent. I don't believe we live in a straight line world where you look at, Infosys's or HCL's growth for the last 2 or 3 years and you draw a straight line and say things are going to be rosy going forward. There's a lot of change involved. And I think the Indian provider's in a great situation, but how I see it is that it's a race. And it's a race between the Indian providers. They've already developed incredible capability. They really know how to leverage at least the Indian resources. So on the one hand, the U.S. and UK multinationals, they have to be able to develop that capability. And I think at this moment they're behind in developing it, but they've made dramatic progress in the last year. On the other hand, I see the Indian multinationals, they literally have to go the other way. They have to develop the deep industry vertical knowledge, those account relationships. They've got to demonstrate that they can hire people of different cultures and keep them and grow them. And so the race is this. Is it going to be easier for the U.S. and UK-based multinationals to develop a low-cost expertise and leverage the great resources in India? Or are the multinationals, can they do that easier than the Indian firms can develop those skills and account relationships and vertical knowledge that's required for them to grow and truly move up the food scale? So I think it's going to be a great battle. And it's interesting because from our point of view, when we do a transaction, we're thinking 3 to 7 years. And so on the one hand, it's exciting to look at Infosys's growth or Cognizant's growth, and obviously they're not an Indian based firm, but to look at those growth statistics and say it's exciting, but if you project out 2 or 3 years and you're growing at 30 to 40 to 50%, and your attrition's 15 to 20%, that's a little bit scary for our clients. So teeing up those points, I'll leave it to our other panel members to take it from there.